Welcome back to the show, everybody. Check out these headlines we have for you today. So we're going to hear from Rostin Benham from the CFTC on Ethereum. You're going to want it. We're going to hear from Brian Armstrong and Coinbase on the recent suing by the SEC, Cristian Carlo, Rosie Rios, former SEC enforcement official. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on Twitter and YouTube for exclusive content. Right now, $1.14 trillion market cap for crypto. The market is off by 0.3%. Good afternoon. Bitcoin, 26,300 plus right now. Ethereum, 1839 and change. Tether market cap, 83.1 billion plus. XRP is 51 cents. Good afternoon, everybody. Let's get started. If you haven't done it, you're going to want to join the Digital Perspective Mastermind group for a bunch of reasons, but I can tell you, we know the markets are collapsing all around us. I know you can't keep up with everything, but let me tell you something. This is the learning curve you're looking for. Investor checklist, portfolio creation, private groups and lessons, weekly live streams. You're not going to believe the amount of information that you can learn. Whatever it is you're looking to become, by being in this space, I guarantee you the tools are here to help you become that person on the other side when you come out of this. This is the time when real wealth is made. Make the investment in yourself. Get in here now with that special offer we're doing, 3-day free trial. Check it out for yourself. You're going to be glad that you did. Click the link below the video. Let's get started. Right here, we're letting everybody know June 13th, which is supposed to be the same day we get those Hinman emails in the SEC versus Ripple case, there is going to be now a congressional hearing. It'll be the House Financial Services Chairman Patrick McHenry has just announced a full committee hearing scheduled for next Tuesday on June 13th. We will be paying close attention to that and anything we can get from that, as well as hopefully the Hinman emails unsealed and released. Well, if you're looking for the ultimate buy signal, it's not financial advice, but that weather vane who endorsed Ethereum and others just months ago is changing his incompetent tune. Why is this clown still on TV? Boy, do we love Dr. Martin Heisboy. Take a listen.
Because unlike the banks, these crypto assets all seem to be scams, and I want you out of them. Many of you traffic in them every day. You should. You're wrong.
I tell you, I don't know if Jim Cramer actually has a soul. I think he's a Wall Street puppeteer and puppeter, actually, and he does what he is told to, and he is constantly giving the advice that seems to work out to be the complete opposite to retail. Make no mistake, XRP is one of the chosen ones. Shout out to Subjective Views. I got you on that one. Damn right. Right here is Rostin Benham talking about how he feels about Ethereum in the recent congressional hearing. Take a listen to this.
I guess one of the questions I have is as we identify of the 20,000, which ones are, for lack of better terminology, worthy of the regulatory framework? I mean, does it have to be a certain dollar value, a certain number of individual owners of the different cryptos, and how do you keep somebody from manipulating it? Obviously, if you could buy into an unregulated one and somehow manipulate the price that it became regulated, you would make yourself wealthy, because once you became regulated, then you're going to be part of the, for lack of better terminology, the chosen ones. Yeah. that actually are able to engage in transactions.
The vast majority of these 20,000 tokens you mentioned are largely not trading. You probably see, if very little to probably no trading on a daily basis. The vast majority of the trading occurs in a small handful of tokens in the dozens at most, and probably smaller than that. The idea and the concept around a regulatory regime wouldn't be any different than what you mentioned on futures or options or swaps or equities, is that you'd have registered exchanges, and in order to trade those tokens in a regulated way, you'd have to list the tokens on the exchange. If they remained off exchange, then that would be a violation of either the Commodity Exchange Act as refined or amended, and then of course the Security and Exchange Act as well. I do think a lot of these tokens, given where they are right now and the activity that we've seen over the past few years, would probably over time disappear, both because of the weight of regulation and because they've largely become obsolete.
I tell you, just thinking about that from what he's saying here, it seems like the answer is in the response to me. You can see the way this market's going to look according to Rost and Benham's statements. Look, they're going to tuck the large majority of assets into the securities framework. And it seems to me that Rostin is on board. There's all this choke point 2.0 and what's going on. To me, I see the SEC and the CFTC more in line with one another than people make it out to be when they talk about it. I don't see them out of sorts with one another. I see them building a way that they're going to regulate this space. And and as we all know right now, and you certainly know from my video this morning, if you saw it, if you haven't, you should watch it. Gary Gensler has admitted he does not have the jurisdiction to go after the crypto exchanges currently without congressional approval. So there is something here that needs to be done. This is not over by a long shot, ladies and gentlemen. But here we take a listen to John Reed Stark. Now, I'm not going to play the whole thing, but John Reed Stark, obviously somebody who he's like a lightning bolt in this space, right? But nevertheless, I want you to hear what he says when he's asked about the Coinbase lawsuit and actually about crypto. And what he cites here is the SEC's right based on the Reeves test. This is what he leans into. Now, remember, I still happen to believe that when something is a note is still very, very relevant to this crypto space and even XRP's future, whether it's at Second Circuit Court level, appellate level, or Supreme Court level. I think when something is a note, according to the Reeves test, will play heavily into things in the future in the digital asset world, the projects that survive. Let's take a listen to this clip here.
That you want them to do.
Help us with this, though.
Sure.
Do you fundamentally believe that the laws on the books are enough for a judge to fairly deal with crypto technology, and that we should be leaving it to a judge to use the rules that have been in place to address these issues? Or do you think that Washington should be addressing these issues? And if that's true, do you have any hope at all, I don't, by the way, that lawmakers in Washington could figure that one out?
Right. I have no hope at all as far as Washington goes. I don't know that they'll figure anything out with respect to crypto. But with respect to your first question, of course, the laws are perfectly clear. Again, securities regulation is not meant to be precise. It's intentionally drafted to be broad and all-encompassing. In an SEC case called SEC versus Reeves, Chief Judge Justice Thurgood Marshall made this point absolutely clear. The laws are perfectly clear. Again, securities regulation is not meant to be precise. It's intentionally drafted to be broad and all-encompassing. In an SEC case called SEC versus Reeves, Chief Judge Justice Thurgood Marshall made this point absolutely clear. Nothing was ever written to cabin the scope. Clarity is not just uncommon in securities regulation, it's deliberately avoided. So if you look, the SEC have brought insider trading cases, derivatives cases, municipal bond fraud cases, eel farms, ostrich farms, orange groves, everything, whatever the concoction, whatever the iteration, again, ICOs, SAFs, lending programs, staking programs, they're all securities. If you wrote it specifically prescriptive, that would be a terrible thing. You use lawnmowers as your analogy. If I go to my neighbor's house and I steal their lawnmower and I take their lawnmower and use it to mow my lawn, and the police come knock at my door and I say, well, there's no law against stealing lawnmowers. I mean, it's principles-based regulatory framework. And that's what works in securities regulation. Specificity is anathema to all of that.
John, I've been reading through the complaint, too. 101 pages, like you said, from the SEC. I mean, they seem to be making the case that if you're going to say that you're a broker and a dealer and a clearinghouse and perform all of those same operations, then how can you not register as such? That seems fairly straightforward.
Becky, that you're preaching to the choir. When I was chief of the Office of Internet Enforcement, I did it for 11 years. If anybody had called themselves an exchange or a broker-dealer or a market maker, these are very important regulatory nomenclature that come together. That means when you're regulated, and I love when Coinbase and some of these other entities say, we're regulated. They're not. because there's no audits, inspections, examinations from the SEC, no licensure, no cybersecurity requirements, no net capital requirements, no insurance, none of these consumer protections. And if you look at the Binance complaint, and they filed this TRO last night, you'll see when you don't have these kinds of protections, the kinds of commingling that can be done, the kinds of thievery, the kinds of chicanery, none of those things are alleged with respect to Coinbase. There's no fraud alleged against Coinbase. But in my mind, it's almost worse because Coinbase looks like, hey, we're a legitimate broker-dealer and exchange and market maker, but we just don't register with the SEC because the products we sell are like buying a shampoo bottle on Amazon, not like buying securities.
This is what you're up against right here, ladies and gentlemen. This is the mindset. This is what we're up against. And this is Brian Armstrong talking about being up against it. And he makes the point that we've talked about here. How do you let Coinbase have a public IPO, go public? How do you let the company go public if you're so sure that the rules are clear? You should have stopped them before allowing them to go public, and for which John Reed Stark had no answer to that question earlier in that interview.
Help us understand from your perspective, when you first saw this lawsuit, what your reaction was, and to the extent that you have a defense, and I know you've taken to Twitter, but now you can take to the airwaves, what it is.
Yeah, well, I mean, we were disappointed to see this complaint from the SEC because I feel like we've had a long history of being very transparent with them and really every regulator around the world that we've worked with. So even going back to 2021 when we became a public company, before becoming a public company, you have to disclose everything about your business in depth. There was many back and forth revisions of our S1. And frankly, they had all the knowledge then, and they allowed us to become a public company. And then we're going through time, and Chair Gensler has statements to Congress saying that he doesn't feel he has the authority to regulate this industry. And we're seeing conflicting statements from the CFTC and the SEC chair. And we even filed a formal petition with the SEC asking them for clarity about a number of points in the law, which they never responded to. And then this Wells notice and a complaint arrives. And so this isn't good for America. It's not good for the industry, obviously. And we now need to go get clarity from the courts.
I want to show you, Chair Gensler was on CNBC yesterday. I want to show you a clip and get you to react, if I could.
Try not to vomit.
Take a look at this.
In the Coinbase complaint, we note that they have, through the Coinbase wallet, you can trade 16,000 different tokens. And there's a lot of debate as to the use cases and whether there's any there. Look, we don't need more digital currency. We already have digital currency. It's called the US dollar. It's called the euro. It's called the yen. They're all digital right now. We already have digital investments. And you have entrepreneurs representing digital investments on this program all day long. And it's whether it's the big tech companies, the automobile companies, you name it. It's all digital right now, the investing world. So what is the real underlying value of these tokens? And that's why you need full, fair, and truthful disclosures.
Do you think this is about disclosures, or do you think this is about the underlying currencies that are on your exchange?
Look, before he comes in and answers, and I want you to hear his answer, it's important that you do. If it's about disclosures, then how did FTX get away with being the dumpster fire that was?
It's tough to know exactly what he means by that. I mean, our self-custodial wallet is not trading crypto, the ones that he mentioned, some huge number. That's happening in DeFi. That's not something that we actually operate the trading of. Our centralized exchange is really trading a much smaller number of assets. We reviewed, over 1,000 assets in crypto. We rejected 90% of them because we felt they weren't appropriate for our exchange, and about 200 of them are listed on our centralized product. And I don't know, to his point about what's the there. People are using crypto for all kinds of things. They're not just trading, and they're doing payments with it. Ukraine raised $200 million, and presidential candidates are taking it. And it's a new technology that can be used to update all kinds of financial services, and we don't need the government picking and choosing our technology winners. Let's let the market decide.
You can't say it any better than that. Let's let the free markets decide the winners and losers in crypto in the digital asset world, not the SEC's Goldman Gensler. Here we have crypto dad Christian Carlo, one of the few that seems to have a clear understanding about how to not only understand this market, but how to regulate it too. Listen to him.
If we were to define a digital asset, how do you think it should be defined? And I'm going to leave that open for the whole panel, and then we'll go to jurisdiction next. But, Mr. Chairman.
Thank you. And Mr. Soto, I must say, it's nice to see you again. The last time I saw you, we were playing guitars in this very room.
We were rocking it out.
Former Chairman.
We were rocking it out, definitely.
Mr. Graywall said something interesting before I want to actually build on and answer that question. When looking at any crypto, I think it's important to look at the underlying blockchain. The value is in what does the underlying blockchain do? What is its purpose? What does it serve? And it can serve in many different functions.
There you go.
There are some that say all cryptos are securities, but I think that's only if the underlying blockchain serves a capital formation purpose. An underlying blockchain may serve something that looks like a commodity. It may serve something that looks like a banking function. It may look like something that does governance. It may look like something that creates different forms of art forms. This technology doesn't easily fit into one simple box. And so the answer to the question lies in what is the purpose of the underlying blockchain? What purpose does it serve? And that's why it is challenging. And again, we commend, I think all my colleagues commend this committee for the very healthy first stab it's taken at this and to try to come up with some definitions that will work as a lasting legal framework that we can.
Yes, and absolutely. And I hope Christian Carlo gets to be someone who contributes to that going forward. Now, listen, I want to remind you very quickly here. Rosie Rios, the 43rd treasurer, is on the board at Ripple. And she says clearly, as of September 2021, and even recently, XRP's primary purpose is facilitating cross-border payments while other cryptos find their value in speculation. That's what we need to know. And the case is going to end soon. Now ask yourself, will the Ripple case still be without a decision from Judge Torres when FedNow launches? Now, this is an older article here showing the relationship between Fed Payments and U.S. Faster Payments Council and Ripple and FedNow. But that is the salient question. Do you think so? Almost 1,000 people have voted here in just the last couple hours here. And we see 56%, almost 57% of the people believe that Judge Torres' decision in the SEC versus Ripple case comes out before FedNow. How about that one? I believe her mind's already made up too. This here is a reminder. I'm not going to play the clip because you don't need to hear it. We all know what the deal is. Whether it's a synthetic CBDC, which is really issued through a private company for the central bank. There's multiple different models. We know Ripple could certainly serve in this role or help facilitate this role. But what we're waiting on is a decision. And to see what's going to happen to a chart that looks like this. Ripple got sued when XRP retested the orange line. You could see it. Coincidence? Almost like elites with money wanted this to happen. If we break the red line, it's moon time. And here we go, right here. We're trying to get past that red line and get bullish, ladies and gentlemen. That's what we're trying to do. And I want to see it too. I certainly believe in XRP. I believe in the ledger. I believe in the technology. I believe in Ripple. I've picked my horse. Have you picked yours? Not financial advice from me or anyone else. I'll catch all of you on the next one.